we work out tax payable for an individual, we also need to ensure we identify and apply any relevant tax offsets for the individual taxpayer. Sally is an Australian resident, aged 69 years and single. During the recent income year, Sally received a social security pension, a net capital gain, bank interest and fully franked dividends. Sally's only deduction was bank charges. Sally paid the full health insurance premium to a private health fund for hospital and ancillary cover and incurred medical expenses during the tax year. So let's take a look at what tax offsets Sally is entitled to for the tax year. Firstly, we need to have determined Sally's taxable income. Sally's assessable income includes the Social Security pension payments, which is rebate income, the grossed up dividend, the bank interest and the net capital gain. Subtracting Sally's deductions leaves us with her taxable income. Next, we have to determine Sally's basic income tax liability by referring to the general tax rates and applying the applicable amount and rate for Sally's tax band. Now, we can look at the tax offsets and also any applicable charges and levies. Sally qualifies for the Senior Australians and Pensioners tax offset as she is over 65 years of age and not in jail. As Sally is single and has a taxable income less than the cut-out threshold, she qualifies for the maximum rebate. We should also note that Sally is also entitled to the franking credit, as the grossed up dividend was included in her assessable income. For her private health insurance expenses, Sally is also entitled to a tax offset under Section 61-205, subject to conditions being met under Subdivision 61-G. As Sally is a single person earning less than the base tier threshold and between the ages of 65 to 69 years, she qualifies for a rebate discount on the premium she paid. Sally also qualifies for a medical expenses rebate under Section 159P. In Sally's case, her income is less than the adjusted taxable income for rebates amount for singles and is therefore entitled to a rebate on medical expenses exceeding the threshold amount. Sally's taxable income is also less than the applicable threshold. She is also entitled to a low income rebate. The non-refundable tax offsets, being the Seniors, Australians and Pensioners tax offset, the medical expenses rebate and the low income rebate are then applied. In this case, these completely offset the tax payable liability, making it zero. Remember that these are non-refundable offsets, so once the tax liability is reduced to zero, the offsets are no longer applied. Tax liability does not go into credit from these offsets. Sally will have to pay any other levies that may be applicable. The Medicare levy calculated on Sally's taxable income can be reduced by the refundable tax offsets, being the private health insurance tax offset and the franking credit, leaving an overall tax refund. It is important to note that gross tax payable must be reduced by non-refundable tax offsets, such as the SAPTO, before adding any applicable levies or government debt repayments. From this, refundable tax offsets and any tax paid are subtracted to give the net tax payable.